Good morning, everyone. Today is Monday, April the 8th, and this is the futures in 5, taking a look at the ES. We are just a bit below the close on Friday. We'll need to get up and over that before we see any buyers. That number's around 28.98. But we do have significant amount of congestion that's going to send us into potential sellers waiting above. That's anywhere from 29.07 to 29.14. This is where the initial breakdown from October began, and so we'll be watching it as significant resistance. Earnings season begins, and so analysts have pulled down estimates. So we'll have to see if they've pulled down enough for companies to surprise, or if they are sitting at pullback motions that they did not pull back those estimates enough for them to surprise enough, and then we'll fade. Now, if we're looking at it purely technically, we're going to see that this is still a lot of thin volume. If it moves up, it's very likely to pull back. Take a look at this formation. The first time it moved up into the area, it pulled back. This time it's moved up into the thin volume area. It's moved up into that area. It should pull back. Pull back into what? Higher lows. This is a very bullish pattern. And so we can't expect big breakdown. But if you look at this 28.89 area, if it fails to recapture this as the days of the week continue, you know that there's a fade. Of course, you can short at any time, but shorting here is a cross-current event. There is some element of trend line that gives you upper trend line resistance, so that's there, but I would look for wave counts that say, hey, I failed to make a new high, and I've lost my support zone, and that's around 28.89. So if that happens, you pull back and it fails to recapture that zone, then you've got yourself potentially an intraday short. Same sort of mechanic holds here. It's a little messier, but we've got an auction vacuum here. S-curve test, just as likely, punches up, that pull back into resistance zones. There are a lot of key charts sitting right at resistance. Do not buy the highs. It simply has not been a good thing to do unless you've allowed yourself the opportunity to have a tremendous amount of risk. And I am speaking to the intraday trader. If you are an intraday trader and you bought this high because you could see price action would be bullish, chances are you did not have a 270 point stop. Okay, for the swing trader, I would hope that you wouldn't engage that much unless your pockets are tremendously deep, or else you run the risk of blowing up your account. It's always better to watch for the pullback. If the pullback is shallow, you're in great shape. If the pullback is deep, you're much, much happier for waiting for the tests of old resistance coming up as new support. And that really is what we're looking at in the NQ today. YM is the one breaking out. It's also in very thin volume. It's down here at the 300 level. Notice old resistance, new support. That's around the 268 to 278 area. There's negative drift, thinning volume, which has nothing to do with making the trade or not, folks. Volume, well, volume's a thing that a lot of analysts can argue about. My observations with volume over repeated time is that volume tells you, hey, I'm going to hold to go into a specific level, but it says nothing else about where that level could be, whether it's a higher high, whether it's a lower high, whether it's formed a peak, whether it's formed a valley. Everything's got to be a combination of observances. There's nothing about an individual observance of volume that gives you any kind of reliable data from a probabilistic space. It just tells you, hey, you better watch. And what's happening here is diminishing volume says, hey, you better watch. But I've talked about this till I'm blue in the face, saying, hey, don't buy those highs because they have a tendency to pull back into support zones. But I can tell that from momentum, which uses volume to make that estimation. All right, let's take a look at the CL. This one continues to rise. I just heard from another chemicals analyst this morning on Reuters, and he is talking about price action in oil not matching what suppliers are doing with their stock holds. So this is a push up into some known resistance target that somebody is driving after. Okay, we've got Midwest issues. We've got flooding still up here in this neck of the woods. pushing prices to the north, but we're pumping it out very, very effectively, very efficiently. We're exporting, we're doing all kinds of things. Price action simply is pushing into areas that overall supply is not matching. This push in saying that there is limited supply is not actually looking at what demand is doing. So very interesting. Now, at the end of that diatribe, we're still bullish. 63.84 is the next target up, and then 64.60, somewhere around there. What do we have? Another day, another week. All the technical divergence. Look at this. Tons of technical divergence. All we did was come into support. Support action sits way below here. 61.30. That's the low end of this motion that I anticipate. This is a thin volume pocket pushed up by OPEC chatter. Old resistance, new support. Will be in good shape for a pullback that bounces. I would not buy the highs here. It is just too dangerous, particularly with the leverage. You've just got to learn to be patient. Lastly, we'll take a look at gold. Gold is pushing up over its 1300 area. Let's take a look at where the resistance zones are sitting right now. You can see this area of resistance holding that region. What's most likely? Listen, I'm sitting under my zero line here. This is pulled back. I've got a support zone. If I flip to a 4-hour formation, I'll be able to see that what we've got is a rounding area that's got upside pressure that sends me into a resistance zone. Ultimately, that is going to give me another fade. So this is not a breakaway patch, but it's very interesting that it's moving this rapidly. Now, what we've noticed is the convergence of an inverse relationship between cryptocurrencies and gold. We'll have to look at that, and then we'll have to look at the dollar to see what it is going on overall today. But it should be a pretty interesting day. Good luck trading.